trade recap today, real quick. Hopefully we don't get copyrighted.
Yeah.
This shit is nuts. I love it.
Yeah.
Mac Miller's dead, so hopefully that rights are there. This intro is nuts. And then it goes into the drop. It gets
Yeah, I've been rapping since I have a wrist.
Alright, that's it. No more. I have a bad feeling that it's going to get copyrighted. But we going to get into today's trade recap. Let's just get straight into it. Alright, today was a pretty solid day. You know, I really kind of expected price action to clear up, especially after NFP, and it did. It was maybe, with my bias, a little wacky because I was bearish going into kind of the session per se, but then larger time frame I was bullish to these relative equal highs on NASDAQ for the week. So we're not obviously going to make it there. But yeah, if you look, Monday, rally up, Tuesday, oh wait. I'm tripping. That is not Monday. That's 4-hour chart. This is Monday. Larger time frame, bro. Alright, I'm just going to get rid of all this shit because I can't even see. I can't even see what I want to say, you know what I'm saying? I'm just going to get rid of that. Keep that. Alright. I can't pull it off the wall, man. I can't do it. Alright. You see that right there? It's the same shit. Alright? And we still haven't completed. Actually, I guess we did kind of complete it. But it's the same thing. Larger time frame for our market maker buy model to the upside. Monday. Why do we leave this new week opening gap open? Because we're aiming for this high. Swept out liquidity, aimed for that high. Monday we were long. Tuesday was a tougher day because of where we're at. You know, we still wanted to see this market structure shift. So once the market structure shift, we would expect a retracement. So then on Wednesday we retraced. Made sense. Hard day, reversal day. Thursday came up in there, retested our old new week opening gap into this 4-hour order block, rallied higher, or sorry, not rallied higher, but you know, that's the reversal essentially. So 2 reversal days, already difficult enough. NFP comes in, then we can extend to our buy side liquidity up here, which is our, you know, target for the market maker buy model. That's besides the point. That's kind of what I'm realizing after the fact. But you know, when you're here on Monday, it's kind of hard to see that. You know, you have to know sort of, you know, what is our, you know, idea on the larger time frame. You know, let's say for example, you know, the market maker buy model starts here with our original consolidation right there, right there, right there. They all have names, but you know, this is consolidation, your reaccumulation, again, more. This is the fake one. Rally lower, market structure shift to the upside. What do? Absolutely rally through those lows. Caught a lot of people off guard there on a Friday, and then that was our liquidity go higher for the rest of the week. So that's a good explanation to kind of see how the week went. Let's just get into today then, you feel me? Today, a little more complicated. You know, going into session, I'm like, you know, I want to see some sells. You know, I like to see, or, you know, I said this, you know, let me just pull it up. I forgot exactly what I said. But I said bullish as hell, like, you know, straight away, off rip, because, you know, this is a bullish looking chart. On the day I wanted to see us, you know, head higher. And then, you know, or we're bearish as hell to the relative equal lows. So we were either heavy in either direction, is what I'm trying to say. And it was like that. I, you know, hindsight, I could, you know, attest. And I traded both sides of that. But that's why it's kind of harder to get, you know, a good bias, I would say, especially on NFP week coming off the new year. you know, it was tough to get, you know, a general bias. But yeah, let's get into the nitty gritty. We have some pretty interesting stuff here. So come up into 9 a.m. open, or sorry, not 9:30 open. We already have this external liquidity swept. I'm gonna delete that. It's more lines. External liquidity swept. We come down. We get below this low right here. So the way it identifies a low is, you know, a high, a low, high, a low, high. It's all based on these candles. You know, I could have also used this low as the market structure shift candle. It's the same thing. It doesn't really matter. However, once you go on that shorter time frame, now we know that we're gonna come out and take this low again, the one that swept out our 15-minute market structure shift. So what time is that? I think that's like around 9:20. Yeah, 9:20. So let me go at this 15-minute, or sorry, 1 hour. On the 1 hour, remember, I'm bearish. I'm expecting us, you know, if we get below these lows, to take them again in that sense. So then what do? We rally lower in the morning. We get this 1 hour low, same thing, high, low, higher, like a higher high from this one, low, high, low, high, low, broke through. So this is our, you know, a high probability order block, all this stuff that, you know, sent us higher above into this high. So once we get below that low, that's my market structure shift on that larger time frame. Keep that in mind. So like I said, 15-minute market structure shift, 1 hour market structure shift. We need to come back to take this low, essentially. And it's 9:35. We rallied away from it. You look on the 15-minute, dude, this is a perfect sell model. Like, it don't get better than that. You know, we market structure shift, retracement into this fair value gap, inverse fair value gap. You're shorting that any day of the week. That's why I shorted, and I wasn't worried about news. You know, let's say news came in and stopped me out. I'll get into ES in a second because it was absolutely beautiful, the way 1 minute market structure played out, and it ties into the same concept of when market maker buy models or sell models are over, because you know, it's one thing about seeing them, but it's one thing about knowing when, you know, they're over, when they've hit that target that they wanted to hit. Anyways, so yeah, I was gonna enter with a limit right here, and then my stop loss above this high, but I was like, you know, let me see the displacement. If we want to come up higher into first presented fair value gap on Wednesday, and then go back lower again, you know, I wouldn't want to be, you know, necessarily a part of that. You know, in this consolidation, I wasn't really looking to enter. So once I got that displacement, retracement into this fair value gap, I took a short, stop loss above Monday first presented fair value gap. Textbook, I should have had my stop at that high, yes. However, seeing how much rejection we have on first presented fair value gap, and even these wicks and these bodies respecting, I had pretty high conviction that we weren't wanting to head up there. So then took the short, consolidated for a bit. This is where I'm going to pull up ES. I wish I could pull it up on this one, but I have this photo here. We'll just do that. Okay, so remember with the market maker buy models and sell models, it's important to know when they are over and when they are done. So it's the same concept, right? It's the same thing, man. Are you ready? Start from here. High, low, not a higher high, not a lower low, higher high. So immediately we know that since this high was broken by this candle, we are gonna follow through. You can long that. That's a potential long, valid market maker buy model into the 15-minute order block for value gap, whatever. Then what am I looking for? I'm looking for the next low and the high. So I'm looking for this low to get broken right here. Once this low gets broken right there, market structure has shifted. It's in the definition, market structure shift. Oh my gosh, man, this gets me hype. Market structure shifted once we got underneath that low. Now what can I expect? A retracement and then a move to take out the low that got put in at the market structure shift. So what did I want to see? I entered where? Here on NASDAQ, same area. That, you know, very well, we would have rallied lower. However, this is where time plays a role. 9:49 macro, not yet. 9:51, I guess I did enter right on the macro. But we have 10 a.m. news. Here we go. Here's our high. Here's our low. We put in a higher high. This is our high, low. if I see a higher high above this candle, I can expect this high to get taken out. Right? Same logic with this. Same logic. But keep in mind, this model is still needing to be completed, which is a key. This is like the number one hardest thing to realize with these market maker buy models and sell models is when they're gonna be done, and and necessarily it's easy to know when they began. Okay, they're everywhere. You can see when they begin. It's about knowing when it's done, and what is trumps the other one. Why didn't I take a long at that market maker buy model? Because the model completed itself. Get ready. So high, low, put in a higher high. What can we expect? A retracement to then what? Take out the high. We took out the high. Bam. What do? Sell off immediately. Boom. Sell off immediately. Then I can go back on NASDAQ, SMT, whatever. We could have got tapped out. I will give the market that. It could have taken me out there, and I would have been a little disappointed. However, it did not. That's all I gotta say. You feel me? So, SMT, and you notice we don't take this high, so I don't get stopped. Like if we went above this high, then we'd have to complete the market maker buy model. Capiche? Makes all sense. Yes. Okay. Got that out the way. Got that out the way. Now, we come up. We take sell side. I'm aiming for all these lows. Remember, I'm bearish as heck and I'm bullish as heck. So, I was trying to, essentially reap the reward of the direction the market chose as much as I could. So, I only took 2 cons short. Took my profit right around this Tuesday, first center for value gap, and then I got stopped out. Break even. And then I was like, if I'm getting stopped out break even, this is bullish as heck, because why is price rejecting so hard off of this? Are you ready? Got some shit on, bro. Are you ready? High, low, higher high. Market structure shift at that high. What do we expect after a market structure shift? Another short term, and in this case, or textbook definition wise, you'd expect a short term low. This short term low, you want it to be where? Somewhere high probability. Order block. Actually, alright, fuck that. Boom. Over to here. It's my top step chart. I thought it would just be easier to kind of compare a larger time frame and stuff like that next to each other. Yeah. So this is now what our chart looks like going into. Oh my. This is what our chart looks like going into this in this session right now. So we have swept everything. We have this 1 hour market structure shift candle. What do? We retraced and we swept it. It's over. The market maker sell model on that 1 hour time frame is over. You see this candle? We swept it, went higher. What does this mean now? Let's see if we shift back to the upside. If we shift back to the upside, I'll be okay with taking a long up into whatever high I need to take a long into. Wow, man, this is just unfortunate, man. I was thinking about a little side thing. I took 2 off here. That's how it is. There's really nothing else I could really say about it. I just saying price ran hella, and I kind of knew it was gonna run, so I could have tried to leave something, but I got literally stopped out, and then no market maker buy model here either. All right, but that's besides the point. Anyways, I'm explaining the same thing on both charts. It's kind of pointless, to be honest. Okay, so this is NASDAQ. We remember, this is a big old down move. High, low, higher high. As soon as you get above 25,759.50, we retrace back into this breaker block. What is this retracement into the breaker block? A propulsion block. What am I trying to expect out of a propulsion block? Energy. I want to see a start to zip. So I wait. This candle goes. This candle comes down. I'm like, I want to see some sort of movement. Again, another candle, lame as hell. Eventually, put in a tiny wick, and then we start to go. So I enter right around here somewhere, and I take 2 cons off there, because this is hella. Like if you look, this is 600, almost 300 points in this move. So there's a lot of a lot of risk on the table, especially with 3 cons. I think I was risking about 250. Anyways, yeah, took 2 off there, and I wanted to see this -1 standard deviation get hit, and then it came back, just tapped me out, and ran higher. And that tap out was honestly, like, we have a high, a low, higher high, lower low. Okay, I'll expect that low to get taken, but we just kept going. Where do we go? Monday versus NF for value. What did we react off? Again to go higher. First presented on Wednesday. What did we react off on here? Inverse for value up on the daily. What did we react over here? NWOG. These levels are nuts, bro. But let's just be real. Inverse, not there. Failed, broke through, retracement up into, broke through, retracement up into, consolidation on it. Like, this is just, it's amazing. And then what here? Low of day. Your low of day is right there. Or maybe not your low of day, but, and this is also, like, weird-ass price action. I think we're going to come down back next week, but that's besides the point. That's for next week stuff. The hella relative equal lows. I mean, it makes sense to go higher, but this is just the nastiest chart I've ever seen in a long time. 1, 2, 3, 4. We've been ping-ponging around town. And the worst thing about it is that, like, we had a good market. This is why I like summer, May, June, July. The market was absolutely beautiful. And now we're in this... How big of a range is this? 1,000-point range? 1,200-point range? It's not that fun. But other than that, bro, that's pretty much it. You know what I'm saying? Ended off the day pretty good. 1R on the top step and about 0.5R on the trade of 8. So, it could be better. One thing I want to improve on is, not necessarily my risk. I feel like my risk is all right. I haven't over leveraged this week whatsoever. It's only that, like, if I have a personal daily loss limit of $500 and then I take 2 trades and I lose both trades, which honestly should not happen in the first place. Should not happen. Especially if you have a win rate above 50%, you know what I'm saying? So all you need is 50.99, you feel me? And then you'll be profitable in that sense. But if you take 2 losses of 250 in one day from a personal day loss limit of $500, then on a day like today where I only made not even close to half R, like maybe half R, and then so what? Yesterday lost 500, today made like 200, 150, and it's a winning day. You know what I'm saying? And I didn't even take this trade on this account because like why? Like that's kind of the only implication I would say is just finding that, I wouldn't even say consistency, I would just say like what to do in this situation, because I think 2 trades of 250 for a $500 personal day loss limit is good, but then your wins also have to win. You can't just be hitting 1-to-1s. That's 250. That's nothing. 250, but you lost 500 the day before, and then say you lose the next day. Say you lose 2 trades again or 1 trade, you're back to where you started, and that's just not how trading should work. It works, your wins trump your losses by a bunch. But yeah, that'll get itself figured out in due time. But I like today. Today was really good. And yeah, hopefully the market will look something more like this going into the future. Tired of this nasty ass price action we had this week. Basically break even on everything. On it, maybe I'm down on the trade of 8 on the week a little bit. But yeah, pretty much all I gotta say. Good end off the week on a good note in that sense. Yeah, that's all I got. I will see y'all later. Peace out. I'm about to play some outro shit. You feel me?
I'm glad he didn't. Right, made